Welcome to another episode of Trends and Ideas. I'm your host, Isabel Sender, and our guest today is S&P Capital IQ equity analyst Stuart Benway. He thinks select timber real estate investment trusts, or Reits, are undervalued, both going into their third quarter reporting period and longer term. Well, thank you very much for joining us today, Stu.
Glad to be here.
Well, tell us, many of these companies you cover actually report next week, but let's go beyond that. Why are you optimistic longer term?
Well, in the short term, we see the companies benefiting from the improvement in the housing market. But over the longer term, we see demand from Asia increasing, as well as prices rising from damage caused by the mountain pine beetle.
Okay, well, certainly those are risks. And what do you see as the main risk to this particular group?
Well, certainly the housing market drives demand and prices for most of these wood products and land and real estate to some extent. So any lack of recovery or further lack of recovery in the housing market would be a risk for these companies.
Understood. So does S&P Capital IQ have a recommendation that fits this theme?
We do. We like Plum Creek. We have it as a 4-star here. Symbol is PCL. We see earnings in the third quarter increasing about 17% due to higher margins in the timber business. Over the longer term, we think prices will still be high due to the factors that I just mentioned, the pine beetle and recovery in housing demand. And we also think their real estate business will continue to grow profits.
Well, thank you very much for sharing your views of this, Stu. And we encourage all of our subscribers to read more of Stu's views on MarketScope.com in a related Trends and Ideas article that's called Select Timber Reits Set to Exploit Housing Demand. Until next time, thanks for watching or listening. I'm Isabel Sender for S&P Capital IQ.